On September 8, 1900, a Category 4 hurricane made landfall on the city of Galveston, Texas. The estimated death toll was between 6,000 and 12,000 individuals. On April 18, 1906, San Francisco was struck by a major earthquake with a magnitude of 7.9. 3,000 people died. On March 21, 1913, Dayton, Ohio experienced one of the greatest natural disasters in Ohio history. For 5 days, rising water covered the city, with 360 people reported dead or missing. If you look up the word insure, you'll see that it means to secure and protect, to have a plan B. In a world where unpredictable things can happen, sometimes the only control you have is to have a plan B. Whether it be the theft of property, a major fire, or weather-related disaster, there are security nets that make that hard landing a little softer. Still not convinced? According to climate change expert Sandeep Chamling-Rai, one of the biggest issues that's missing and lacking is that loss and damage is basically only looked at from a monetary point of view, but there are losses and damages which cannot be quantified in monetary terms, in terms of loss of ecosystems, loss of cultural heritage, and loss of life. See, not everything is replaceable, but you are not without options to lessen the loss. Let's examine what you can do to prepare for those life events that catch you off guard so that you can enjoy life to the fullest and know that you've done what's needed to protect yourself and your family. Hey everyone, this is Dr. Michelle, and I want to welcome you to another segment of Tab Talks. And I have a guest with me today that's going to help us unpack, do you have a safety net? Can you survive a catastrophic loss? And I think with all of the catastrophes we've seen over the last couple of months, whether that be weather related, whether that be social activism related, whether it be COVID related, I think asset protection is going to be a big topic for now and probably months and months to come. So I'd like to welcome my insurance expert, Greg Fay, to Tab Talks. Hey, Greg.
Hey, thank you so much. And I love how you said asset protection, because that really puts into perspective what we do.
Yes.
Kudos.
Thank you. So let's just get a basic understanding so we can just jump right in here. I want to give the audience a basic understanding when we talk about property and liability insurance. How does that work?
Absolutely. Well, the most basic definition of insurance is a customer or a client is exchanging money for risk. They're making a determination. They're transferring risk to the insurance company. So let's pick your home, which is everybody's usual biggest asset. When you have your home, you have two different things that you're looking at. You're looking at the dwelling, the building that is the shell of your home, and then you have personal property that's inside, but you also have liability for anything that could take place on your property. So I'll kind of stop with just those two basic definitions. And if you need me to dig deeper or drill deeper, I'm happy to.
Okay, just so everybody understands, there's the actual home itself, there's the things that are inside the home, and then there's liability for what could actually happen on the grounds of your home. Just so people understand, there's 3 levels of risk that you have relative to home ownership or property. Okay, so let's talk about the policies, the actual policies themselves, because you have your coverage and then you have these add-ons called riders or endorsements. So can you describe what some of those basic add-ons are to a coverage or a typical policy?
Absolutely. If you allow me to expand just a little bit on the basic policy. So you did a great
Sure.
job of talking about the basic policy comes with the dwelling, which is the home. And then there are some, you could have some other structures that aren't attached to the home. You can have personal property that is inside the home. And then you can have liability if something takes place on your property, whether it be an injury or, God forbid, a fatality. Those things take place. So those are always going to be the core of your policy. But you bring up a great topic because a lot of people don't pay attention to some of the things that you can do to enhance your policy. A lot of folks would call them in the used car business, they may say, boy, there are a lot of bells and whistles that come with this right here. And some of the ones that you hear about most these days are, boy, what if I own some extremely valuable jewelry or collectibles or antiques, or maybe some really expensive musical instruments or photography equipment? Those things right there, most policies will have a limit to coverage. So if you want those type of things covered at their full value, you'll have to do exactly what you called it. You'll have to endorse your policy with maybe a scheduled piece of jewelry or one of those things right there. So I'll kind of hit pause. I don't want to get too lengthy there. If you want me to
Wow.
put it down, I'm happy to.
So that's a good point. So if you have a cap on, say, the contents of your home, and maybe you have a baby grand piano that's worth probably half of that, you need to really be talking to somebody about, do I really have the appropriate coverage levels? Because that may not cover something that's an antique or, in your mind, priceless.
Oh boy, what a great example. The most frequent thing that we see is jewelry. And, you know, you look at an engagement ring or a wedding ring or things of that nature, or heirlooms or hand-me-downs, things of that nature. Those are the most frequent, but you really brought up a great example of some larger things. I talked to a client about 2 weeks ago that does have a baby grand piano that is valued at about $129,000. And if we did not have an individual discussion about what the value was of that piece, he was actually willing to get it valued, and the insurance company then has to make a decision. Do we want to include that piece on this home insurance policy, or is that something that we're going to recommend to this insured that he might want to consider a separate policy? So you really picked a great example.
Wow. Okay. How does, because we've talked about today catastrophic loss, how does the insurance industry define catastrophic loss?
Boy, that's a great question. And when you look at the insurance industry as a whole, I think most catastrophic losses will be recognized by the size of the event that took place. You had sent me some notes earlier, and I thought you really touched on something that anybody that watches your podcast locally remembers: the Memorial Day tornadoes of 2019.
Yes.
But there's probably a lot of people that will remember back to 2008 when the dry Hurricane Ike came through and so many people were without power. So you bring up a great example of, okay, Hurricane Ike, I lost power. I might have had to have a roof. Skip forward 11 years, and then I got hit by the Memorial Day tornadoes. How does that impact me individually? Insurance companies, the industry will normally put a label on an event like a Hurricane Ike or the Memorial Day tornadoes, and they'll call it catastrophic based on the area loss. And of course, in 2019, the Memorial Day tornadoes, it was significant. The way that the industry will treat that, and it really does fall down to each individual carrier. State Farm may look at it differently than Allstate, and they may look, and Liberty Mutual may look at it differently from all of them. The way that there is kind of an unspoken rule, a catastrophic loss should not count against. If Dr. Michelle had an event with the Memorial Day tornadoes, and that were the only event that she had experienced in a 5-year period, really, as you shop for insurance or as you renew your policy, your existing current insurer should not hold that against you. And for the most part, that is what you will recognize. So again, I can drill down a little bit deeper on that, but I'll hit pause. And
okay. Well, I think you make a perfect segue into, we've seen major catastrophic loss, whether it be Katrina or Ian. And when you look at the dollar amounts that they're saying these events have caused, I'm thinking about my own wallet or my own account. If you keep sustaining these billion-dollar losses over and over and over and over, at some point in time, I'm thinking, how am I as an insurer? Maybe I'm living up here in Ohio. I'm not in Florida. I haven't experienced that. Eventually, isn't that going to impact me as a consumer?
What a great example. That's a great question right there. And it's rare that a lot of folks at this level will ask that question. So I give you a lot of credit. Here's how it's supposed to work. Each individual state manages their own. You've heard of the Ohio Department of Insurance.
Yes.
When people come and when insurance carriers come into the state of Ohio and they become an admitted carrier, that means that the state of Ohio has researched them. They've checked their financial strength. It's more than just their AM Best rating. It really is, what type of reserves do they keep on hand to deal with anything that may impact this area directly? So when you take that into consideration, you may hear stories. I'm going to move down to Ian because you brought up really something that just took place. If anybody has paid attention to whatever your news source is, really Florida home insurance has crept its way up on the headlines because so many Florida insurers have taken such significant losses that the state has come to them and said, you as insurance company ABC, you simply do not have enough in reserve to meet our requirements to pay claims. So they've actually been, I'm gonna lack the exact term of what ability is taken away from them to provide insurance, but they really get pulled out of the market until they prove their ability to reestablish reserves that are required. So a company like State Farm insures one out of every 3 homes in the entire United States.
Wow.
The largest. As the name State Farm, they don't write insurance in Florida because they've bumped up against what I just spoke of. So I don't necessarily blame State Farm. I'm like, that is really an environment that is extremely difficult to operate in.
Wow.
So when you ask if it
1 in 3,
it should not. Really, the crux of your question was, boy, does Ian affect me here in Dayton, Ohio? It should not, because of how everybody is licensed and insured and registered in each individual state. But it's really difficult to imagine that State Farm is going to, or whatever, I apologize for keeping using the same name,
okay,
insurance company ABC is going to have to figure out a way to move assets to that state so that they can continue to provide insurance in that state. So,
okay, my next question then. Okay, and we talked about the tornadoes that happened here locally. And I know personally individuals who found out the hard way that they did not have the right type of insurance. They lived in apartments and they thought they were purchasing renter's insurance from the property owner. And it turned out that the property owner had covered himself, but not covered their valuables. Can you talk about renter's insurance and how that's important and comes into play when there's a loss?
Oh, what a great situation to talk about. You really touched on an opportunity for people locally to reevaluate. So a great question. So an insurance policy, we talked about homeowners, and that's
Yes.
easy to understand. You own the home, you protect the walls, the roof, everything inside. And then you have renter's insurance where really you do not protect any part of the dwelling whatsoever. You do protect your property, and when you purchase a policy, you say to the agent, or hopefully the agent is doing a really good evaluation of your assets and saying, let's talk about what you own. And then you set a limit of, let's say, $25,000. I can say that because I just wrote a policy for one of my daughters that is renting a place, and she has about $25,000 worth of stuff. There's no coverage for anything outside the box. Anything that sits inside the box that she owns, $25,000 worth of coverage exists. So if we move the clock back and look back in time, and if that apartment would have been located right in the path of the Memorial Day tornadoes, praying to God nobody was hurt and only property was damaged, she would have coverage for whatever the personal property limit is on that renter's insurance policy, no more or no less, as long as she was able to establish, yes, I had a couch that was valued at $1,500. I purchased my own dining room set, my computer, my Xbox, my clothing, those things right there. That's relatively easy, but you bring up a great example. There's an in-between policy for a condominium or a townhome owner, for someone that belongs to a condominium association or a townhome association, where a lot of times I see that there's confusion over the association covers the walls and the roof. And then you, the condominium owner or the townhouse owner, cover the studs in, the drywall, the flooring, the ceiling, the cabinetry. So there can be a lot of confusion. I really always hope that if someone reaches out to us, we really work hard to drill down and determine those limits and what they should be. And I really hope that others couple up with a really professional insurance agent that asks those questions.
Wonderful. And I think you make a good point that before you sign something, if you really don't understand what the coverage is, that's what people like Greg do. They will sit down and say, look, so you have a clear understanding that this is not covered, or this is your responsibility. Because I think a lot of people thought that they were purchasing coverage from their property owners. And I'm like, you really should sit down and make sure that your interests are covered, because they were just simply making sure their interests were covered and not yours.
Well, I give you a lot of credit. I remember yours and I's first interaction, and I shared with you what I thought was an opportunity to maybe move into a different policy with some other coverages. And if I right now searched my inbox and I looked at the first flurry of questions, I appreciated it because it kept me on my toes. It identifies some things that maybe I forgot to ask. So you were like, I want to know this, and can you please tell me this? And hey, I have these items here, and we're doing this particular upgrade or remodel. How does that affect me?
Yes.
You made it easy. I challenge a lot of people to really ask questions about, the coverages that you ultimately own the stuff as well.
Yes.
It's down to. So
you have to be an informed consumer.
Yes, ma'am. Yes, ma'am.
Okay, I really enjoyed researching the show because I actually even found out some more stuff. So let's talk about living in a floodplain.
Oh boy.
which I guess is defined as you live in an area that's next to a stream or river. Does a homeowner policy normally cover that if you live in a floodplain, or is that one of those things you need to ask about and say, is this covered?
I am so glad you asked that question. You've done your homework. I got to give you credit, Dr. Michelle. So that's a great question, because if you are not borrowing, let's say you're buying a home. If you're not borrowing money from a financial institution to purchase that home, nobody is going to provide you with a check and balance. So if you go to a mortgage company, they have a financial interest in the property that you're purchasing. They're going to do the homework to make sure that their asset that is collateralized through the mortgage is covered. So they'll let you know. That's kind of the easy way. But so many times we really bumped it. You'd be surprised at how many people have the ability to buy stuff for cash. And especially if you're an investment property owner. And all of a sudden you buy a home, you did well, you sold the investment, you made some money. So you move on to your next one and you're paying cash for the property. And there is not a financial institution that says, we're going to require you to have that. Hopefully most realtors will be the check and balance. I know that you can't always fall back on that. I pray that everybody hires a realtor that has that level of professionalism and that level of attention to detail to pay attention to that. But you bring up a great question, because your homeowner's policy will never, and I can't say that, I could sit here and say never, 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 it won't cover groundwater. And that's what floodwater is. You have to purchase a policy from one of two places. You have to either purchase it in the most familiar policy that agents deal with is one from FEMA, that you actually purchase it from a Progressive or from a Farmers or from a State Farm. They sell it, but it's actually underwritten through FEMA.
Wow.
Those have become not as price competitive. So the private market, in a capitalist society, that's what happens. A private market jumps in, and companies like Neptune will come alongside and they'll offer some more price competitive flood policies. But you're right, on your standard homeowners policy or renters policy or condominium policy, that floodwaters are not covered.
And, I found an interesting statistic that said 1 inch of floodwater, and this is from the Insurance Institute, 1 inch can cause up to $25,000 in damage, just 1 inch of water.
One of the agents and one of my best friend, and in our agency, we're lucky to have 4 veterans that work, and a couple of them are really good friends of mine. My best friend and I went down to Hurricane Katrina, went down to New Orleans very shortly after Hurricane Katrina. And Dr. Michelle, you are so right. It is devastating what the least amount of water, and obviously there was a significant amount, but I had no idea. I wasn't in the insurance industry at the time. I was floored. So you are so right.
Wow. Okay, everybody. Hope you're taking notes. Check to see if you live near a river, maybe a nice view.
I like how you say it, Dr. Michelle. You really call upon your listeners to take some personal accountability.
Yes.
I've got to applaud that. That is so. If they're listening, please take heed to what she is saying. Yes. There is a level of personal responsibility. I applaud your approach there. It's obviously nothing new to you.
Well, and I'm hoping that our listeners, we try to give people this information so they can be empowered to make good decisions for themselves and for their families. And I'm just always grateful that I've got experts I can call. And they agree to come on the show. So I appreciate you, Greg. Yes, okay. This used to be a running joke, but I don't think it's a joke anymore. You know how when somebody with a tornado or something tore down their house or there was a flood, they said, we're going to rebuild. When that keeps happening over and over and over again, at some point, is it just like, maybe that's not the smartest thing to rebuild a house on sand at the waterfront if now it's the 3rd time? And you've had a catastrophic loss, at some point, do you really have to evaluate that?
What a man. You are on top of your game with questions. And I hope that your listeners are paying attention equally to your questions, not just my answers. That is a great question. So investment property owners, you either are one or you know one.
Yep.
Investment property owners have to make that decision all the time. So if I sat down with a very new investment property owner and I said, as we're going to cover the one home that you own or the multiple homes that you own in your portfolio, what do you want to happen if you experience a total loss? If it burns down or if it blows over, what do you want to take place? And insurance agents, I find in the marketplace, don't ask that question. And it's such an important question because if I ask you that question and you answer back honestly, it tells me the type of policy that I want to write for you. Because if you say, Greg, if my investment property burns down to the ground or blows over, I want to receive my investment back or whatever that dollar amount is. And I may just pick up and move and look at purchasing another investment property in another place, wherever that may be.
I did some more research, Greg. So let's
go. I'm down for all of this.
Okay. I ran across a term and I actually had never seen this before about premium subsidies being paid in some industries. And it talked about like farming. Can you kind of educate me on that? Because that was something I had never heard about before, that there are some industries where their premiums are subsidized.
Well, I'm gonna first confess that my knowledge is very limited, but I am going to tell you the little bit that I do know. I'll give you an example of crop subsidies and farming.
Okay.
It is something that, and I'm going to be very vanilla here. And if you drill down and ask me some specific questions, I'll certainly answer what I know.
Okay.
I'm going to sound as if I'm painting it like flood insurance where FEMA and the federal government participate. It's going to sound a lot like that because with FEMA, if you purchase a standard flood policy from, you name the carrier, American Family, Nationwide, you name them, it's going to be the same premium because it's acquired from the same government agency. You're just walking through a different front door, Nationwide, Allstate, whatever.
Okay. Okay, that makes sense.
Crop insurance, I know that there is participation from the federal government to keep the costs down with the hopes of not needing it. How did I do there? I mean,
okay.
I think the cost is kept down because obviously we need farmland. I'll be generic. I won't speak of anything, wheat, corn, green beans, wherever. We need that. But I think that the subsidy, the effort is, and I'm going to double check this and make sure I submit this answer to you after the fact.
Okay.
I'd be horrified if I gave that. But my understanding is it really gives a local farmer that is trying to provide some food locally, some crops locally, that it keeps that cost down, and really a hope that it's never needed. And I don't know what the claim rate is. That would be the one place that I'd be
okay.
The answer. So
the crop insurance program grew from $254.8 million in premium subsidies for 99.6 million insured acres in 1994 to $6.36 billion in premium subsidies for 769 million insured acres in 2019.
Well, it's kind of like they're giving you it almost seems like your protection in advance, because they're helping. It seems to me that they're helping you in advance so that if you have the catastrophic loss, they've already helped you. I mean, it's keeping the costs low. That's what it sounds like to me. I thought it was interesting.
It's the same. If you go back to the very first question that you asked me, it really is when you purchase insurance for anything, health insurance, pick the topic. It is you transferring risk to somebody. Now, I know somebody is normally a large company, so somebody isn't a person, but you're transferring risk, and that person or that entity, that company is saying, we will accept that risk for this premium. And then you decide that premium seems fair.
It's fair.
For my home, if I lost it, paying $1,500 a year for my $500,000 home, that seems like a fair exchange to me. And the nice thing about the capitalist society that we live in is if one company says, hey, Dr. Michelle, we'll charge you $1,500, and another one says, well, we think we could do it for less, you get a chance to exchange that risk for a lower premium. So
Premium. Excellent information, Greg. Okay, if somebody's sitting there now, and hopefully somebody was smart enough and they went and got their policy and they're looking at it right now, what kind of checkup should they be looking for right now when they're looking at their policy?
oh boy, I'm gonna chicken out, and I'm gonna chicken out in a good way. I'm gonna chicken out in a good way. That's why I'm so thankful for someone like you, because if our agency sends you an email, you respond and answer the questions that allow us to continually provide all of the net worth that you've accumulated. You provide us the answers to where we can best do that. So you give us the information so that we can professionally advise you.
Okay.
I would say, to your question right there, if you've received a renewal or a new policy or just a proposal for insurance, I would ask that anybody looking at that, number one, trust the relationship with the person that sent it to them. What type of reputation do they have in the community? Do they have significant Google reviews? Has the Ohio Department of Insurance had any complaints against them? And if all those things good, and most of the time those things will be relatively good, if you can trust that individual, do like you did, Dr. Michelle, and just ask questions. Hey, this coverage C person, what in the world is coverage C? Speak to me in plain language, right?
Yes.
You know, I had an attorney send me something the other day, and he says this, and I was like, you got to dumb that down for me right there, because I am not an attorney. And so I hope that people will, when they get that document, recognize the gravity of how important it is, and decide, okay, I trust this individual here, and look at it and see if the information's correct. You know, some simple things really come, you know, so many times home insurance policies will give you how many bathrooms you have in the home, how many bedrooms in the home, is there a basement, is just a slab, you know, is the basement finished? I love it when one of my clients says, hey, Greg, you have this here. You show me living in a home that has a 1,600 square foot basement, and this policy says unfinished. My basement is finished, Greg. I've got a pool table down there. I've got a home entertainment center. We have a finished bedroom down there. I hope just kind of that I would challenge them just to kind of look at those things, because those questions will go so much further than any kind of one thing I could direct anybody to look at. You know, I could say, hey, go right to this, but boy, if they're just inquisitive and they know their stuff, that's not a really good professional term, but they know their stuff better than anybody does.
But see, that's one of those things where, just like when you change your smoke detector battery, people, you probably need to read those policies once every 6 months to make sure that you haven't made significant change, because you could have like added something to the house. You could have added a room and you didn't think, I didn't tell my insurer about that. You could make really major changes. And if somebody's out there listening and you know you're renting and you do not have a policy, I'm going to put Greg on the spot and put his contact information up there.
Yes,
so you can talk to him, because the risks are just not worth it. They're not worth it. People are losing everything. And then they find out they didn't have the most basic coverage. And it's just not worth it. Okay. Now I always give my guests the last word. And what do you anticipate are going to be some of the changes? And I know you don't have a crystal ball, But I think in light of all the climate change and all the catastrophic losses that we're seeing, I'm finding that interesting that states like Florida are going back to some of these large carriers saying, look, if you don't have enough bond, if we don't see that you have the assets to cover some of these losses,
Yes,
we're
ma'am.
not going to be able to write certain policies here. Are we going to start to see that more?
I don't know so much that. Here's what I would say. Home and auto insurance has become such a commodity. It really, you can get it over the internet. You don't have to have a personal relationship with somebody. So we see so many consumers and so many consumers say, my home, I am going to pay $800 a year to insure my home. And that's my final decision. I'm just going to find the company that's going to do that for me. So they've commoditized it, just like the price of gold. They've said, I'm going to buy gold when it gets to be this price. Insurance, whether it's home or auto, those being the most two frequently used, it's a commodity until it's not, because if you haven't developed the relationship with that agent, where if you have a question about a claim, if you can't text them, email them, call them, and get a response within a reasonable amount of time, our agency, we believe within 12 hours, we want to respond to everything. If it's in the weekend, we say 24 hours. It doesn't matter if you reach out to me on Saturday, 24 hours means I'm going to attempt to reply back on Sunday. I think you emailed me yesterday on Sunday. And that's very important.
You guys.
That's very important to us, because we know that even though consumers believe that what they have, our product, is a commodity, we do not believe it's a commodity. And we believe that life happens all the time and there's always questions. And that's why other insurance agents think I'm crazy, because over 3,000 of my clients have my personal cell phone.
Wow.
And it's so I can get answers quickly. And if I can find out if somebody's frustrated about something quickly, I think that I can get the answer. So the answer to your question would be, boy, make sure that you get a relationship. We'd love it to be us, but there's so many trusted agents out there that operate in your community. Find them and develop a relationship and say, if I need to talk to you, what is the fastest way I can get a hold of you? And if you trust that, boy, go with it. Go with that agent right there, because that is what's going to save you so much heartache in the long run.
Well, Greg, I always give my guests the last word. What do you want to leave us with? I think you've given us a wealth of information. I think hopefully everybody understands and has a better understanding of insurance, a better understanding of risk, a much better understanding of why you need to protect your assets, because they're your assets and it's your responsibility to protect your assets and before you wait for someone else to do it. What do you want to leave us with?
Boy, I just go back to the relationship thing. You're right. People work so stinking hard for what they have. The home, everybody considers their castle their home, whether it's 1,200 square feet or 12,000 square feet, whether they drive a 1999 or a 2012, you take so much pride and you work so hard to accumulate the assets, develop the equity in what you own, and just take a little bit of time, develop a relationship with a trusted advisor, and they're out there. We do a great job, but I know that there's just a ton of them out there. I've got friends that are insurance agents all around the state that if I couldn't help, I would certainly say there are good agents out there that will say, if you need me, it doesn't matter when it is, get in touch with me so I can answer questions for you to help you protect the things that mean the very most to you.
Wow. Greg, thank you so much. And you are so humble, but I'm still going to tell everybody, choose Greg.
You caught me when I was 56 instead of 26, Dr. Michelle, because at 26, I don't know that I had nearly this much humility, but I'm thankful that I do now.
I want to thank you for coming on Tap Talks.
I tell you, it's a huge compliment to me. It really is. This is an honor to me. I hope that you have a wonderful night, and thank you for your business.